It's great to be here, and within the next few minutes, we are going to delve into this topic, trying to explore how Africa connects into global technology systems. From all the ongoing panels, we get to recognize that there are a lot of systems and technologies and innovations that are emanating across the different countries in Africa. But you also know that we are not an island. Key question is, how do we integrate into global systems so that we can get maximal value for the people? Technology is about the people. How do we integrate into global systems so that we can improve the lives of Africans so we can get maximal value? And we're going to look at it from policy, infrastructure, and also from a co-creation perspective. So one of the first questions I'm going to ask is, and I'm going to ask that to Majid. Majid, what is that question regarding Africa's integration into global systems that we are not asking? And why would exploring that question bring a lot of advantage to the African continent, especially when it comes to technology?
Yeah, thanks for that question. I think by way of introduction and just to give some context to what Chipper and where our focus is, we started 5.5 years ago to effectively empower Africans to do things that they could not do, or it was ridiculously expensive to do. And so we started with an intra-African cross-border experience. We've now deeply partnered with Visa. We issue virtual cards across the continent, primarily Nigeria and Uganda, and we are one of the largest issuers there. Similarly, we work in Uganda to issue, to enable a local Ugandan to purchase, Tesla shares and US fractional equity, so they can spend, as little as $3,500 shillings, and start to be involved in this global financial ecosystem. And so we spend quite a lot of time integrating with global systems. And one of the key challenges that we've seen interacting with foreign entities is actually almost a perception, and one of these perceptions, the way it shows up, is a lot of African countries are on their prohibited country list or their blacklist. And so when we go deeper into finding out, why is this the case, it usually is because they don't actually know how much work has been happening on the ground. It goes back to KYC. What are your systems for identity? And so we actually spend a lot of time educating them on, for example, in Ghana, here's the Ghana card, here's how the national ID database works, here's all the data points you can get, and here's how the biometric level works. And that ends up really just changing the perspective, this perception, quite a bit. And so really one of that basis is, in order to even get the global systems comfortable, we've got to get our local systems really, really, really strong, and that's already showing up. And so how can we make sure, as we build these local systems, we think about these global ones in mind? That makes it super easy, and then you don't really need to think about the global systems. You've just got to have the local systems really, really well done.
Right. So, Lebo, at the back of what Majid is saying, where do you see perhaps the Pan-African payment system, settlement system playing? Where do you see your role, and how do you bridge those gaps?
Thanks for the question, and good afternoon to everyone. So let's take a step back, as my previous speaker rightfully said, that when it comes to payments, cross-border payments, international payments, there are less than 20% is cleared and settled in Africa.
Right.
The rest are actually cleared and settled in Europe and the US, right? What challenges, what issues does that create? Cost. So when a transaction is made from Zambia to Uganda, it first goes to the UK, it first goes to Europe, and then comes back to Zambia. And when that happens, not just time, the time it takes to clear that there's a time issue when it comes to clearing and settling that payment, but also from a cost point of view. As a continent, we lose billions, about over $5 billion for clearing and settling outside of Africa. So that's the current situation.
Right.
And that's what PAPS is trying to solve. Essentially, what we're trying to solve as a Pan-African payment settlement system is to clear and settle transactions in the continent.
Right.
So to enable a consumer in Uganda who wants to make a payment to somebody in Nigeria, for that transaction to be cleared in the continent, number one, for it to be instant, Number two, that's another thing that we're trying to actually create, is instant payments. You have instant payments and real-time payments in some countries, like South Africa has real-time payments, but not in all countries in the continent. So what we're also trying to do is have instant payment across the continent.
Right.
So in the domestic countries, but also across for payments across countries in the continent. So instant payments is one, cost is another. I mean, when it comes to remittances, most fintechs that started remittance companies were actually trying to drive costs down. The first was Western Unions and MoneyGrams, etc., and then fintechs were birthed really to drive the cost of remittances down. Even mobile money, firstly with domestic remittances, but definitely international remittances. The purpose was really to drive the cost of remittances down. So what we're also trying to do with enabling clearing and settling in the continent is to drive the cost down.
Right.
So it's instant payments to drive the cost down and to enable notifications, right? Real-time notifications for the sender as well as the receiver. I'll give you just a use case as an example. We have informal traders at our borders, informal traders at all our borders in this continent, right? But how do they pay? Currently, they use cash. Could we imagine a world where we're enabling settlement and ease of transactions for the cross-border traders, informal traders, as well as big business? So as a company, we're looking at it at enabling ease, instant payments, efficiencies, but driving down costs, not just for big business and B2B payments across countries, but also for the small business trader who is doing trade at a border in Zambia and going to Botswana to get stock and then sell out the border. So we need to enable efficiencies and ease of transaction for that trader too. Right. But lastly, you have a Visa card or a MasterCard, right, that enables you to transact around the world with ease. Could we have an Africa card that enables you to transact with ease? Currently, as we sit today, whatever country you go to, you need to download a wallet. So in Kenya, I have M-Pesa. In Ghana, I download MTN mobile wallet. I go to Zambia, I need to download something else. I go to Uganda, I need to download something else. Generally, that's the current situation, where you download wallets in every country. Yes, that's fine, right? But should we not have a payment system that actually integrates all of them and creates interoperability with all those wallets and with the bank accounts? So we do have some systems that are doing that have integrated all the wallets, but integrating all the mobile wallets as well as the bank accounts. I think that would be revolutionary and would help all of us, actually, in this room. Right. We have interoperability across mobile wallets, across bank accounts, and ease of transaction and settling those transactions in the continent.
Right. So perhaps has big advantage for the continent, especially on the cost side, on the cross-collaboration side, on the settlement side, and also on the instant payment side. And that is very good for SMEs. That's even very good for people in general. Now, Matt, on the back of that, what do you think from a policy point of view we should be looking at? You should be looking at to harmonize, the different regulations across countries and to ensure that the vision of PAPS becomes even more solid and more advantageous to the people.
Yeah, absolutely. So I'm currently working with the Cambridge Suptech Lab. We focus on financial supervision with financial authorities. But my background is actually in payments, in FinTech, before I joined the lab and worked with regulators. So I'll start by saying I have no doubt that from a technical perspective, we're going to have efficient, effective systems for integrating across the continent globally through traditional channels, FinTech channels, through mobile channels. This is going to happen. It's coming. So what I'd like to really highlight is what is the role of policymaking, regulation, supervision in the areas that aren't quite as technical, that are about adoption, about not leaving people behind. So three main principles come to mind for me. So number one is building trust and inclusion in any system. When you're bringing two payment systems together, you're bringing two cultures, two worlds together, and it's really important that that's accounted for. So I've done quite a bit of work in my past jobs working with studies on financial inclusion for the past decade or more, particularly in the African continent, and understanding what drives inclusion. At the top of that list for consumers, thousands of consumers from 4 countries across Africa that we've directly surveyed, is reliability of the system. Only after reliability comes the value proposition, then accessibility, then affordability. Of course, all overlying a viable business model so something doesn't just close up shop. But reliability is at the top of that list, and that means trust. And the way to engender trust in a system is to have effective, stable financial ecosystem and to have consumer protection measures in place. So that's the component that supervision comes in. That's a huge role through consumer protection, prudential supervision, anti-money laundering, these other areas. So that's trust and inclusion. Secondly, we're moving from processes that exist. Just because they're not technically digitally integrated doesn't mean they don't exist today. Right. So there's a digital transformation component that comes along with this, which then includes data that's coming off of this and the need for data science. So I think in terms of digital transformation, this is really about understanding how we can make sure that the data that's being generated by these interoperable systems are designed also with customers in mind, additional financial services beyond payments, but also with supervisors in mind, with regulators in mind, so that there doesn't have to be another layer of innovation on top of that if we take that all off at once. And of course, data science is a huge portion of this. We heard yesterday the Minister of Commerce and Digitalization in Ghana talking about a national data lake that's integrated with a regional system and a international system ultimately. That's a very forward-looking, it's here today technologically, but it's really like at the cutting edge of where we're hearing public sector authorities talk about this. There are others who are still just getting reporting in today. So I think making sure that we are accounting for capacity building along with this too. So at the lab, we work on transforming financial authorities' perspectives on the paradigm shifts that are happening as a result of this digitalization. We get hands-on with data science tools, like really tweaking models and understanding how these systems work so that authorities can understand the systems that are in the market that they're regulating. And finally, we work with authorities to innovate, to do design sprints, value proposition designs, technical specifications, process integrations themselves, so that they're prepared for these systems to be integrated and prepared to take care of those kind of measures that make a secure and stable and safe ecosystem for consumers to operate in.
Right. So from a policy perspective, we need to consider the different nuances, especially the different cultures, the different understanding of what trust is, the different capacities, ensure that across Africa we are able to harmonize one regulation at the trust level, regulation at the data protection level, and also look at areas around talent development, capacity building, and also from what you're saying, let data lead the way. That's what I hear from what you're saying.
Yeah, absolutely. And having shared taxonomies and standards around this data allows for sharing of tools also. Right. These are things that need to be built on top of this. So it's not only the capacity and the technologies, but it's also the sharing of successes, lessons learned, and tools on top of this.
Right. So on the back of sharing, Michael, where do you see Africa's advantage? And how do we leverage Africa's strength to give us a good position within the global technology landscape?
That's quite a broad question, but one that I'm really happy to answer. I'm from Ericsson, which is one of the world's leading mobile phone network infrastructure providers. But what we've also produced is a mobile financial services platform. And that platform is in 24 countries around the world. 16 of those countries are in Africa. We do have about $500 billion of transaction revenue through the platform on a yearly basis. That's 36 billion transactions. About 70% of that's coming out of Africa. So there is already an infrastructure already in Africa, across most of the countries that actually is very stable, secure, connected to the mobile phone networks. And it's something that Africa has really led with, this mobile-first financial services environment. M-Pesa, everyone knows that story. We can all see what's happening in this market. MTN Momo, which is one of our biggest partners, all of that runs on a very stable, secure platform, which is the Ericsson Mobile Financial Services platform. And that's been built from the ground up over the last 10 years with the African environment in mind. So I will say to you, Africa is already connected to the world through their mobile phones. They're already doing incredibly innovative things on a mobile device with innovative payment services, with innovative banking services, innovative startups. So there's already an incredible ecosystem, and the strength is there. And the strength is also in numbers.
Right.
And what I mean by that is that we're only touching 10% of the market today. The rest of the market, 90% of it is cash. So my view is that let's focus on that grassroots and really bring the mass market onto these platforms. And once we do that, that provides a stable environment to set policy. It gives confidence to governments and policymakers that there is a stable environment. We can then connect it to banks and the traditional ecosystem. But Africa must not underestimate itself from the perspective that they are already leading with mobile financial services and mobile payments. And we should accelerate forward to do that, but off a very stable, solid platform, like we provide with Ericsson Mobile Financial Services. And we're looking to partner with the best in Africa. MTN Momo is a really good example. We've got lots of other partners in Africa, but also the broader ecosystem. We want all the little fintechs to be connecting to our platform, as well as in the broader community, the large corporates, the banks, etc. And once we do that with that stable platform, now we can conquer the world.
Right. So we have a lot of strength, like you just mentioned, from an infrastructure point of view, from the numbers point of view. So we are looking at scale from a connectivity point of view, from an adoption point of view. Now, I want to ask Majid, right? What should we be looking at? Because we've done well with, for example, mobile payment, mobile money. For me, we are leading. Now, what is the next thing that we should be looking at? What technology advantages or what technology strengths should we be looking to pick in to ensure that we sustain that momentum and we don't lag when it comes to the technology frontier globally?
Yeah, that's a great question. And actually, just to emphasize what Michael said, we've got a lot of infrastructure that has been built that actually does work. And we really should not even, in many ways it's more advanced than what we have out in the West. And leaning into that and making sure that they are working, they're safe, that national databases they're actually secure, they don't get polluted. That's so key to every single AML system and compliance framework, any system that we have to build in order to make our global banking partners comfortable with it. And that's been that key thing, that just really going deeply on what works locally. And then in terms of that, there is a trend, like to what you're saying about scale. What investors are looking for is, can you have a Pan-African system or a company that has 100 million plus customers? Right, Nubank just announced that they crossed that, and in a continent of 1.3 billion people, like, the opportunity, everyone knows it's immense. And so how do we leverage what we've already built and all of that and move forward? There are all these open technologies that are now being developed, so we can still build our local systems, but look at these global systems and build them on open standards. And once they're on open standards, you don't have to do much to actually then connect with the global world. Now they will connect with you automatically. And that's how, by focusing on home and making sure the homegrown systems are working, it really powers all the startups, chippers and all the startups globally.
Right. So you believe that we have already much going for us, and we need to bring the focus home and innovate new technologies to feed into I'm looking at Africa as a domestic market, within the context of the world, between the African market. Now, I'm going back to PABS, right? What is PABS doing, especially within the business ecosystem, right, to ensure that more businesses are able to do cross-border transactions, cross-border integrations? What are you doing in that regard?
Thanks for the question. So we currently have central banks that are signed up on PABS, 13 central banks, and then 113 banks that are signed up on PABS. But specifically to your question, from a business point of view, we're also looking at we are working with corporates. So right now, for instance, we are discussing working with a retailer that does distribution across different countries.
Right.
And it's a retailer that obviously works with distributors and suppliers. And they have distributors in different countries and suppliers in different countries, and then they work with truck drivers in different countries from a trade point of view and logistics point of view. So we we are trying to enable the ease of payment across the value chain, because even the Pan-African banks, some of the systems don't talk to each other. So yes, we have them connected into our system, but how can we enable a retailer to speak to their distributor and their supplier to have an ease of payment across the board, even to the truck driver?
Right.
So that's what we're doing. So we are in discussions with a couple of retailers to do that. We're also in discussions with logistics companies. Again, same thing, that do logistics in different countries, and they want to talk to one party, right, to enable payments and clearing of settlement with one party. Because I think when it comes to consumer to consumer P2P payments, there's a lot of innovators that have already solved for that. But the challenge is B2B payments and the limits that are inherent when it comes to B2B payments. So we're also in discussions with policymakers actually to enable B2B payments and a large sum of payments for B2B payments to be maybe not instant but quicker than they are today.
Right. And that's a great one, right? That means that we need more transactional service innovation.
Yes.
And for that to happen, we need startups, we need innovators.
Yes.
One of the biggest challenges is money, right? And I want to find out, what do you think, Matt, that we should be doing to drive more investment into the African ecosystem so that we can consolidate our gains and have a better play in the global technology ecosystem?
Yeah, I mean, I spent a number of years before the Cambridge Suptech Lab with a group called the Catalyst Fund, which accelerates inclusive FinTech models across the continent. Has now expanded to work on, more globally climate models and climate finance and things like this. Lebo and I actually met there. So, I think the main thing there is to make sure that there's a strong value proposition that's in a format that people are used to, making sure that everything is de-risked and compliant and not risky in that way. And then engaging with specialists who understand growth, understand how to go from early stage, product market fit to a growth model to like maybe national or international scale, and set up that strategy early on, get the tooling in place, the analytics, which can also serve as compliance technology later on at that growth stage, and really de-risk the model so that investors feel confident that, hey, this thing looks like what I'm used to, and it's innovative, and it's packaged in a way that I can't really say no to. Why would I? The growth is the potential for growth is unlimited.
Right. So you are looking at it from the perspective of risk. You know that back in the day, and even still now, certain countries still have challenges integrating like platforms like Visa and easily utilizing it. Key question is, and I want us to go back to the same, bringing in the investment. Majid, you've been with cheaper cash. What do you think we should be doing to bring more money for innovators like you to be able to scale your operations?
Yeah, I would say one of the key things that we hear from all of our investors and what they're really looking for is they see the opportunity. There's no question about that. But can we build sustainable companies within the continent? And obviously, everyone knows how the markets have been changing recently. And so that's the key thing. What are the profitable business models that are sustainable, that can be built, such that you actually do have a closed loop? And a big thing, and I can say this on behalf of every single fintech, like we are craving for, sustainable partnerships with banks that are commercially aligned. I think one of the challenges we've had is when, a banking incumbent views us as a competitor and it becomes this competitive dynamic. But when in reality, the market is so ginormous and we're here to grow the pie together and practically eat together. And so how can we as an ecosystem have partnerships that are aligned where we can have business models that actually work? And if you can do that, and we will do that, honestly, the investor dollars will flow. That's not an issue. There's a lot of people constantly reaching out all the time. Almost they just wait and see, is this the right time to actually invest? And an investment money shouldn't be about figuring out, can we work together? It should be about accelerating what's already working. And the great thing is that even in just the last 5 years that we've been building Chipper, there's been a significant amount of progress. We're excited about PAPS. I think that's going to change the game quite a bit. But it's, can we work together with great partnerships? Investors see that and they would invest.
Right. So Majid is saying let's look at more partnership, because out of that we can create more innovation. My last question is to you, Michael. You work with Ericsson, you do a lot of integration. What problems do you think we should be solving?
That's a broad question. But I want to keep it really simple.
Yeah.
With all of these great things we've been speaking about, I think it boils down to, a simple thing like education.
Right.
It's skills. We want to create a really strong skill set and skill base in Africa, so that when we do have investment into startups, we've got the skills then to support it. And I think that's one of the things that Ericsson is really trying to do on the ground, is build up that local skill set. We're operating now in over 17 markets in Africa, on the ground, with engineering resource on the ground, supported by, engineers in Sweden and all over the world. And we see incredible talent on the ground. So how can we nurture that on the ground to then create solutions for, I always talk about it, let's create solutions for Africa, so solve Africa's problems with Africa's solutions, with Africa's people. And I think that's a really, really key thing. If we can get that real ground-based education and skills, there's a huge opportunity for us to do a lot of things. And I think the investment and all the other great stuff will then come.
Right. So from what Michael is saying, if we boost our talent pool, we stand a chance of having a lot more people interested in the continent, and then investment will flow. And we've had conversations around POPs, the opportunities that it presents for us, especially when it comes to reducing the fees, cross-border trade, when it comes to integration. We've spoken about standardization of policy across the continent. We've spoken about partnership. So we see that overall we have great advantage as a continent, and as a people, we should continuously explore and always ask the question, how can we do it better? And how can we present or develop new innovative ideas that present competitive advantage to us, so we can have a better play in the global innovation system? Thank you very much. Thank you very much, panel members.